Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. And this, ladies and gentlemen, is why you want to like and subscribe to every video, because we were right. Yesterday, I told you about consumer spending and about Home Depot and about Target. And I've really been telling you about Target for a year and some change now, but Walmart came out with their earnings. They raised their guidance and they said that their net sales increased about 7.6%, which is good. So let's break down what is going on with Walmart, why things are looking relatively good, and then what are the concerns that we should have. So for those that didn't like yesterday's video and didn't subscribe and watch it, here's what you need to know. Home Depot, Target, and Walmart have all now announced their earnings. They are used as what we call proxies for how the broader economy is doing. Now, these are not the best metrics in the world, but it does tell us whether or not people are shopping at Home Depot, whether or not people are shopping at Target, whether or not people are shopping at Walmart, which means that these are people who are spending money, and that can give us a gauge on whether or not we're moving towards a recession, whether we're right in the middle, or whether things are completely fine. Now, the reason why you can't use it completely is because it's only 3 companies, and each of them are quite different. Nobody is going to Home Depot every single day. There are only so many times you can redo your bathroom, okay? And once it's done, it's going to be done for several years. So Home Depot, not so much. They said that they're not seeing the exact same amount of sales as they were. Target said, look, people are stealing a lot of stuff, which is what they said. People are not buying furniture and some of these bigger, nicer items that we sell here. And people are stealing from our store a lot. But we are going to lower our guidance. We really don't think that things are going to go all that well. Walmart said something different. Walmart said, again, their sales increased, that people are still buying things. However, their behavior is shifting. They're not necessarily buying the TVs and nice electronics, all that type of stuff. They're buying clothes, they're buying food, and those things have been more expensive. That was the main thing. So yeah, people are still spending. Again, Walmart is not a proxy for the entire economy, but it does gives us a little bit of a glimpse. Here's the other thing that I want you to pay attention to for Walmart. Yes, their sales increased, but what I had mentioned last year when I talked about Target is that shift behavior, or the ability to shift down. Target is known as a more expensive, more premium brand or store to shop at. Well, Walmart is not. And I said, as inflation rises and things get more expensive, you can shift down from Target to a Walmart to get all your basic stuff. They have more locations. They're open 24/7. I can get groceries and gas, for that matter, as well as food, TVs, and all that stuff. Whereas after Walmart, you're shifting all the way down to like a Dollar General, Dollar Tree, and it doesn't really meet all your needs in the exact same way. Well, they came out today and said for the first quarter, that's exactly what they saw. They saw a lot of customers who had shifted previously from other stores, more expensive places, to come here, or there rather. And they're also shifting from different cuts of meat, that things that are more expensive, and going to things that are a bit cheaper, primarily due to inflation. That is what we see. And that is, I would say, really the lesson for the overall economy and the overall stock market. Things are okay. They're not great, and inflation is still hurting us, but spending is right now decent. Not great, not amazing, but also not terrible and not falling off of a cliff either. Things could change, we'll see, because remember, this was for the first quarter of this year. It's always information looking backwards. But what I like the most is that they said they are raising their guidance. They think things are going to be fine for the rest of the year, and that things are going to increase from their perspective. So there you go. Okay, now again, it's just Walmart. Walmart could be wrong, and other stores, Home Depot and Target, have lowered their guidance. So they could just be moving from Home Depot and Target to a Walmart, and it could just be that, or it could be that what I've been saying, we might not run into a recession this year. Might, okay? That's a maybe, we'll see, but I'm not overly confident that we're going to run into one, and I'm certainly not rooting for one either. So that's what we got from Walmart. The last thing that you need to know is, should you invest in Walmart? Is this a company that you should put your money into? This year so far, the company is up about 7%. That's fine. But for me, I'm not the biggest fan of Walmart. It just hasn't knocked my socks off in terms of performance. That's really it. That's it. So whether you want to invest in it or not, let me know in the comments below. I do think that it is more of a defensive stock. It did quote unquote well last year. I say that because the stock was up 2 or 3% and Target was down 20 something and the stock market was down double digits and Walmart was not. So there you have it. Okay, now I would gladly take a 2% gain than a 20% loss. I think that's obvious. But Walmart isn't doing anything for me that's like very innovative or exciting, or that says like, hey, this is very undervalued, or this company has a lot of momentum, or I think that this is a place that is a great place to invest. I'll say that. A lot of other companies are fine that don't have the same, I guess, baggage as Walmart does. The reason why, what I mean by that is because of the amount of employees they have, because of the logistics that they have to have, Walmart's margins, the amount of money they can really make is very, very thin. And you're not going to see double-digit growth in revenue or cash flow or anything like you would some of these tech companies and other more defensive stocks, even like a Hershey. So that's what I'm looking at here. Like if I have to pick something that's relatively defensive, that's going to make money, Walmart might get me 5% in a good year. Hershey's going to give me 10 or 15. Right, and that's not a guarantee. These are just from recent numbers. So that's how I would look at it. If I'm going to pick something that's boring and defensive, I'm going to go with one of those than something like a Walmart. But that doesn't make Walmart a bad stock. So Walmart a good company, and do they treat people well? That's a different story. The other thing too is I could also just go with Costco. That's been my grocery store, not personally, but my grocery store stock that I've had for years now because of the way that they're organized. Now, yes, Walmart does own Sam's. Sam's is a better competitor to Costco, but y'all get the point here. So those are all my thoughts about Walmart, about the stock market and the economy for today. If you have any other questions, feel free to let me know in the comments section below. All right. That's it for me as well. You always want to know, you want to check out our members only, because we drop brand new weekly videos and content exclusive just for y'all, including how to understand stocks better and how to evaluate certain companies and know exactly what you should be paying for them. All right, that's it for me. Talk to you later. Bye.